With me on the line this morning's Sam Catalano from Capital Network. Sam, good morning.
Good morning.
Of course, for Sam's full report, click on the eye in the top right-hand corner of your screen. Now, Sam, first off, bring us up to date, if you would, on the latest at Haverst's Arapua fertilizer project in Brazil.
Yeah, absolutely. So, just to remind the audience that Haverst Minerals, they have a number of fertilizer projects located in Brazil. The major one, as you mentioned, is the Arapua fertilizer project, which has begun mining last year. It's a fantastic little asset, basically very low capex, low operating cost business, which we think could potentially generate in the order of even up to 80% per annum free cash flow yields. Fantastic cash generating asset, on reasonable assumptions. Recently, as of last week, the company just announced further investment into expanding some of their crushing and processing capability to further expand production, and that's in line with their expectations that they will continue to ramp up production over the course of the next year or so, feeding into a market that's hungry for their product.
Well, tell me a bit more about the product, Sam. Is it getting much interest?
Yes, absolutely, and I think this is the key area that investors should be focused on, is the uptake of their fertilizer product. There's a few things to look out for. The company has already made sales, has already made significant amount of sales. They've been selling the product for up north of $55 a ton. The major thing to look out for would be any additional announcements on how much their order book is growing. And very importantly, we're expecting the official registration of the product as what's called a remineralizer from the Brazilian Ministry for Agriculture. And that should really be a fillip for the company and give the product a bit more recognition and the ability to really scale up their sales. So that's something definitely to look out for.
And cash-wise, Sam, Haverst Minerals, they're comfortable at the moment?
Yeah, I would say so. I mean, I think one of the great advantages of this project has been the low capex nature of it. So they haven't had to spend a huge amount of money up front to get things up and going. Additionally, late last year, they did a placing that was well oversubscribed. That was for 1.2 million sterling. That's in addition to the 1.4 million they had in the bank at the end of June of last year. So, I think they should be in a very good position, particularly given that we'd expect them to start throwing off some cash in the foreseeable future.
Well, just a final thought from you then, Sam. Some strong news flow ahead by the sounds. Exciting times ahead.
Yeah, absolutely. Look, I think we've been saying for a little while now, this is an asset with great valuation upside, it would seem, on reasonable assumptions, potentially great cash flow generation, which might come back to shareholders as well. And now it looks like 2018 could be a very exciting year for Haverst, where we begin to see the realization of a lot of that as we see sales start to ramp up their product and real cash flow start to come in the door.
For Sam's full report, click on the eye in the top right-hand corner of your screen. Sam, thanks very much.
Thanks very much.